Hello, folks. This is Anthony Bruno and the team from Royalty Exchange with our third office hour session. Thank you for joining us this morning. Um, we are just letting everyone join the conference now. It's just taking a moment for everyone to kind of loop in, so please bear with us. We'll get started in just a second. If you can hear me, as you can see, we've got a number of new faces in the from our side joining today. In addition to myself, I'm Anthony Bruno, Director of Communications, and of course, there's also Matt Smith, our founder and CEO. I'm happy to welcome Gary Young, our co-founder and Executive Vice President, Brian O'Connor again, our Chief Financial Analyst here, and finally, we have Rob Bernard, our lawyer. But there's been a lot of questions that I think both Gary and Rob can probably address as well. So welcome to all of them. So I see folks are still sort of joining in. Give us about 30 seconds here, and then we'll go ahead and get things started. General housekeeping type of points to make. Basically, the way this works is that we've got a number of questions that were submitted in advance when you registered. We are going to start by answering those. There is, at the bottom of your screen, you should see a Q&A feature. And so if you'd like to ask a question additionally to either what we're saying at the time or a new question, please select the Q&A feature and type your question in. I'll be monitoring those and trying to incorporate those into the conversation as we go along. So the best way to do it is via the Q&A feature, please. That way we could all see it and we can all address it. So that's how that works. If you have any other thoughts or questions, again, just go ahead and type them in there. But we're going to go ahead, I think, and get started. We got looks like about 30 people in right now, and I'm sure it'll be slowly trickling through. But for the sake of time and the ability to answer everyone's questions, I think we'll go ahead and get ourselves started. So thanks again. Let's see. So like I said, we're going to start with the questions that were submitted in advance. And I guess we'll jump right into it here. Basically, there's a question here from Morgan that asked for us to please cover in detail the schedule for royalty disbursements. Obviously, disbursements vary by investment, but the questioner, I'm looking to understand the payout schedule. If it's on a quarterly basis, do they begin quarterly after 30 days of closing the auction and whatnot, etc. So just a little bit of an understanding as to how, once you buy an auction, how quickly will you get your first payment, and what's the distribution schedule afterwards?
Yeah, I can take that one. So yeah, like you said, the disbursement schedules do depend on who the underlying distributor are. So our distribution schedule is basically tied to that. So, for example, if it's a quarterly payment by the distributor, what our commitment to is that once we receive that payment, then we will pass it on to the investor within 30 days. So if say an auction closes on the 14th of June, and then the next distribution schedule or the next distribution comes out on June 19th, the investor would be entitled to that payment, and Royalty Exchange would collect that and then pay that through to the investors sometime before July 19th. So it's not really based, our payment schedule is not based on the auction date. It's really based on when we receive that payment from the distributor.
Okay, great. And I think it's also worth noting that we've done some work to shorten the time from when we receive the distribution and then we turn it around because we administer on behalf of the investors. We've shortened that down from what was originally 30 days to, I think, our goal is 15, but we're actually beating that by a couple of days as well, correct?
Yeah, we've been under 10, I think, for the last 2 months now.
All right, great.
On average, yeah.
All right, next question then. We have a question from Jameson. Why is the underlying copyright not included in your purchase if we are buying a life term? And can we buy the publishing copyright?
Yeah, I can take that one as well. Several reasons. I think maybe one of the biggest ones is most of the time we'd be dealing with the creator, so either the songwriter or the artist, and oftentimes they would have assigned that copyright to their publisher. They might be in a current publishing deal or a label deal. They don't actually have the right to assign those copyrights. They're still tied up with their publisher or label. So they don't have the ability to sell it. The other reason is that adding copyrights to a deal does complicate it. It takes it from a passive income stream to now our purchaser does have to do some administrative work to actually work the copyrights, to pay any other underlying songwriters or artists. We know we have done a few of those deals over the last few years, but certainly not the majority of what we do. And I think a lot of it is just because it makes things harder on the front end for us to do the verification, make sure everything is clear on the due diligence end to allow it to be taken to auction. And it also complicates it for investors to be able to understand what it is they're purchasing. And then, after the fact, there is that active participation that they would have to do after they buy it.
Rob, I'll just add it would dramatically increase the cost of each transaction and make assets that are smaller than some certain size, it would just make them undoable because the costs of the transaction would be too high. It'd be difficult to justify. So a lot of rights holders that have really nice income streams that are, maybe 10 or 15 years old, and investors would love to own them. If copyrights were involved, it would just be too cumbersome and it wouldn't be cost effective to even execute the transaction. The artist wouldn't end up with enough left over after it, or it would be so prohibitively expensive for the investor that it would seriously inhibit the returns. And there's for where these are sort of in the copyright stack, where these rights sit, there's generally not any particular advantage to owning the copyright. You don't, because there are other participants essentially who have the responsibility for managing those and who are doing a good job of managing them historically. And, you incur the cost and expense and responsibility essentially associated with managing that if you took it over. So passive interest is what most of our investors are interested in. And that's how we have organized what we do primarily around that.
And if I'm not mistaken, isn't frankly, most of the folks that are coming to us to sell a portion of the royalty streams don't necessarily own the copyright to even make available in the first place, like the vast majority. I mean, we're talking about songwriter share, and they've already assigned a copyright to a publisher, so they can't. I mean, they don't have the copyright to make available. Is that correct?
Yeah, no, they'll have the ability to terminate that assignment from their publisher X number of years down the road. But at the time that they come to us, generally they're locked up by their publishing or label agreement. Okay.
So another question here then is from Alexander, which is, what revenue source should investors give the most weight to and pay the most attention to?
Okay, start with that one. I can jump in there. Okay. So, I mean, the name of the game comes down to streaming. That's what you want to look for. And you'll find those on the composition side with performance streaming royalties and mechanical streaming royalties. And on the sound recording side, it's just your streaming sources, your Spotify, your Pandora. It's how it'll show up there. Sync wants to be viewed. There's a couple like small intricacies with that. So, I mean, one's going to be, you want to look at the on the publisher side of the composition, you'll see iSync, which can be a little bit misleading. Those are largely made up of YouTube royalties. So you want to make sure you look down in the data, which we provide on the website for you guys, because you can easily identify those. And that would be treated more as a streaming royalty, just due to the nature of YouTube. In general, sync makes up roughly 3% of the industry revenue. So you'll want to take that into consideration. Most syncs are not reoccurring, right? They're kind of one-off situations, commercial, a trailer, a movie, something like that, right? So it's one large upfront payment that you'll receive. And you can find some catalogs where sync is a bit more, the catalog can have a bit more reliable sync, right? When it's a well-known song, that sort of thing. But traditionally sync's more one-time in nature.
And I think the main thing, it's not the main thing I take at it as an investor. I don't think of things that are not streaming based to not be valuable. It's just that the streaming trend is the single largest bull market factor in all of music. So, it's kind of the rising tide that's lifted all boats over the last several years. And so when you see that's a key factor in it, at least they have that macro trend sort of on your side, as opposed to, if it's coming from, terrestrial radio play, and that's is kind of in a secular decline. At least the ad revenue associated with it. So it doesn't mean that other sources are necessarily bad, but that, you know, all of the big push in the music industry is definitely behind the streaming stuff. Wouldn't you agree with that, Ryan?
Yeah, certainly. And I mean, when we see growing royalty streams, right, the main driver is going to be streaming.
It always seems to be, yeah.
All right, great. Streaming is definitely the tailwind, I believe, as you've always put it, Matt, behind which you would like to have your investment. So moving on then, from Richard, how do you analyze catalogs' past earnings to get insights for value and future potential revenue?
Yeah, certainly. And again, no one can predict the future, but there's a couple of valuable things you can take from those past royalties. So the main factor is going to be where in the cycle those royalties are, and that you're going to get from the dollar age, right? Younger catalogs start off really strong, and then they start to decline pretty rapidly just due to the nature of how they work. So dollar age, it's going to give you that, or it's going to give you where in the cycle the earnings are. You can also then you use this past source of the earnings. Again, you want to look for a decent amount being made up of streaming, right? If you see catalogs that have no streaming in them, there could be problems there for the future. If you see catalogs with a lot of streaming, that could be pretty well, or set the future up well.
So I'm trying to share a screen here. I hope you guys can see this. That shows the dollar age, I guess, algorithm and explanation. I'm not sure if you guys are able to see this or not. Do you want to walk through this at all, Ryan?
Yeah, certainly. And just to finish up that question, and then I can jump on that. The last part of what the kind of the past royalties can show you, it'll just give you the trend of the royalties. Which way are they trending? You combine that with where they are in the cycle and the source of the earnings. You can, you know, get a general feel for what may happen in the future and make yourself more comfortable with the royalty stream. Dollar age, I know there was a question about how it's calculated. Essentially, what we like to do is we look at, you know, today's date minus the release date and divide it by 365 days out of the year. And that will give you the age of the song, which we can see on the table towards the bottom middle part of the page here that Anthony's showing. So, I mean, this is just a hypothetical catalog where, you know, you have your different songs, different, how long they've been earning for, and then how much of the LTM they make up. And essentially, the dollar
LTM is last 12 months earnings.
Sorry, yep, thanks for that. And essentially, they make up it's a weighted average of how long each song in the catalog has been earning, and more weight is given to older songs as they've been out longer. As Matt's described the Lindy effect, what has happened for, you know, X period of time is likely to continue for that X period of time into the future. But so essentially it gives greater weight to older songs and less weight to younger songs. And we just blend that all together for every catalog, and we come up with, you know, in this example, 4.21 years. And that can be found on our website there.
All right, great. I'm going to stop sharing and move back to our questions then. I hope that answered what people were looking for.
Yeah, just one quick thing. Yeah, sure. Just the idea of dollar age is it's a way to qualitatively measure the royalty stream, the income stream. So, you know, quantitatively we can add it up, we can see what it is, we can see what it's been in past years, and we can see kind of how it's trending. But, you know, the question is does this music have staying power? And you could then you could go and study current play data. There's a lot of different sources where you can find that different current play data and try and draw conclusions from that. But we found, you know, the dollar age to be a pretty reliable predictor of how it will perform in the future, or the stability and quality of those earnings. Mm-hmm. So, you know, between, you know, what it's earned in the last 12 months, sort of where it's trending, and the dollar age, there's a lot that you can determine about the income. Even dollar age, you know, even things like specific sources of income are mostly washed out if the catalog is old enough, if the dollar age is high enough. You know, the sources become even less relevant over time. So that's how we use it. We find it to be an incredibly useful heuristic, and that's why we publish it and share it. And every asset you see on the platform should have dollar age listed associated with it.
All right, great, thank you. So we have another question about returns, basically, like what kind of returns can be expected on the platform?
Yeah, right now we see an average of 12% return on investment. That does include accounting for your cost of capital and any term advances, whether they're 10 or 30-year ones. But right now it's about 12%.
Yeah, and of course that depends on what if you overpay for an asset, or if if the asset doesn't perform in the way that you might expect going forward. I mean, that's there's not like it's no guarantee around that. You just have to definitely be aware of that. The past performance is not indicative of future behavior, and we're talking 12%. We're talking averages, which means some of those were, in the upper 20s, and some were in the single digits. That's how you get to the average of 12.
Okay, and then the question from Connor. I think we addressed the dollar age calculation part of his question already, but the next part of his question was, can you discuss the various rights types available? And he mentions concert versus recorded and things like that.
Yeah, so
we went through concert, but yeah, Ryan, why don't you jump in and kind of
I can lead off, and guys, feel free to jump in if there's anything I miss or you want to add. But I mean, you have the right types it kind of breaks down in a couple different segments, right? You start very high level with your composition and your sound recording. And then you go deeper in the composition side. You have your performance rights, you have your mechanical rights, you have your sync rights, and you have some kind of other rights within there as well. Your concert's going to typically fall under your performance rights. And then you'll have various other kind of rights, like when you stream a song on Pandora, right, you'll get a performance royalty for that. If you're picking a song on Spotify, you get a performance and a mechanical royalty for that. Things like that. On the recording side, you just have you get your streaming, your physical sales. It's kind of sales data type things, right? So you get your CD sales, your streaming sales, your downloads, that sort of thing.
And primarily, Ryan, we deal. You guys tell me. I always try to. It seems that most of what we do with our performance royalty rights for the most part. But I don't know if that's changing or if I'm just being biased.
Gary, would you like to speak to that?
Yeah.
Some of the different types of assets we see in terms of their classification. What we typically have and what it looks like for the future.
Yeah. So primarily, at least early on, we worked with songwriters and their performance income. Which is, so every song, right, has two copyrights associated with it. You have the composition, which is effectively the lyrics and melody, and that's owned by a songwriter and a publisher. And then you have the masters, or the sound recording. And the sound recording is a specific version of a composition. So if you imagine Bob Dylan wrote All Along the Watchtower, so he owns, and his publisher owned, the composition copyright. But then when Jimi Hendrix recorded All Along the Watchtower, he and his record label owned the sound recording of that specific recording of the composition. Same thing with U2's version of it, Dave Matthews, and so on and so forth. Most of the stuff we do is with the composition side. And most of the composition side work we do is with the performing rights organizations, so ASCAP, BMI, CSAC in the US. And that is income that is generated anytime a song or a composition is performed in public. And that covers terrestrial radio, that covers satellite radio, streaming, concerts, bars, restaurants, all that. We've seen a shift in the last few weeks where a lot more artists, performing artists, are coming to us to raise money. And I think primarily based on the conversations I've had with them, it is because they've had their entire lineup of summer concerts canceled and they were expecting that income. And they're
just ignore Gary's horse in the background.
Yeah, I've got a very curious dog in the background who's, well, anyway. And the thing that's interesting about it is there's a lot of new assets that are going to be coming up on the site that are on the sound recording side, simply because that traditional huge swath of artist income being live shows has disappeared.
Sure. Yeah, and they benefit way more directly from streaming. So that's one of the benefits of those catalogs as compared to the performance.
Yeah, and I was going to say on the performance side, just to address the concerts and the live performances directly, those are single digit in aggregate of our data, they're single digit contributions to the earnings power of it. And we do identify when concerts make up a large portion of the catalog. So, make sure you read through our listings and look through the data, because they're easily identifiable.
That's a great point. Yeah, everyone's unique and everyone has its own ways of earnings. And so it's good to kind of have all this information as sort of a background so you understand what the different potential earning types are. But when you're looking at an actual asset on the site, you want to look how this particular one is earning. And that's something that people don't always see. It's not one size fits all by any means. Okay, to keep moving on here, there's a question here about, is there, instead of one type of royalty offering, is there an ETF of these things available to make an investment in? I'll quickly answer that one, and you guys could jump in if you need to. Not with us. We don't offer an ETF or like shared ownership or anything like that, or bundled offerings ourselves. Some of the catalogs that we offer could be almost considered an ETF, because it could be so many different types of songs and so many different areas that it goes into. You could kind of view it like that, but it's not. I don't think that's the spirit of the question. If you're looking to buy into more blended funds, basically there are a couple outside of us that you might want to explore. One I think that's been in the news a lot is called Hypnosis. I think it's just called Songs.
Yeah, they're traded on the LSE. And they are basically acquiring lots of publishing and songwriter royalties mostly, but they're been aggressively accumulating. It's the ticker is Song on the LSE.
SONG.
Do your own due diligence on them. I'm not saying it's a good investment. I'm just saying that is available.
Right. And then there's another one that's a little bit harder to get into, though. I don't think it says as liquid or as many shares available, but there's one called Mills Music Trust. What is that traded on, Matt?
It's pink sheets in the U.S.
Okay.
Yeah.
All right. So those are two that are there. There might I wouldn't be surprised if more pop up, but like that's sort of the main ones at the moment. So, going to move on here. Back to sort of formulas and whatnot. So the question here, I think referencing something we discussed in the last office hour session here, it says Matt talked about a formula that he uses in making his decision on investing in an asset. Could you expand on that, and if possible, using real numbers?
Sure. So this is just simply a heuristic I use to like back of the envelope valuation of a catalog. Now, and this is assuming you're buying, a whole portfolio of these assets. So on a single asset, if I'm just making one investment, there's no way I would use this. I would want to understand more about the underlying catalog. But if I'm planning to buy, $100,000 worth of this, and maybe in $10,000 to $20,000 increments, then this is a formula that I personally would use. This is my money, not with, and I'm not recommending anything to anybody, but this is my approach. I found the dollar age to be so effective fundamentally that, you could basically pay a multiple of the dollar age. So as up to certain limits. So essentially if a catalog is in its early earning cycle, as Ryan talked about, let's say it's been around for just 2 years. Well, it might still have a little bit of burst of earnings left, like high earnings before it starts its decline, or it could be in the middle of its decline at that point already. But at that point, because it's so new, if it's 2 years old, then that has a 2-year dollar age roughly. And in general, I think that you could do okay if you paid a multiple equal essentially to the dollar age. So on a 10-year term, that works pretty well up to about 4 or 4.5. So if you capped it out at 4 or 4.5, somewhere in that range, then what you're willing to pay for a catalog for a 10-year term, you end up with a pretty good returns. I mean, the ones that I have purchased using that methodology have worked out very well for me. The same thing essentially is true for the life of rights catalogs or the 30-year term, which are effectively the same in my mind, except for the cap is higher. With those, I'd be willing to pay up to, if it's an 8-year-old catalog, it's been earning for 8 years, and there's not any, again, huge negative trend that's occurring now. It's not like it's all of a sudden declining. Then I'd be willing to pay up to 8 times for that catalog. And when I'm saying this, I'd be willing to accumulate sight unseen, not understanding that much about the catalog, just understanding essentially what the dollar age is, the general trend of the earnings of the catalog, and and the sources of income. And I mean by sources, I really mean distributor. If it's a PRO income, or if it's coming from a major music publisher, or something like that. So with those few data points, I feel comfortable making decisions primarily based upon the dollar age. So the dollar age essentially acts as the multiple in this case. So that's the way I do it. Again, I think it's a good way just to generally think about it and just show that if something is older, it doesn't matter who the artist is, doesn't matter what genre it is. If it's 10 years old, I'm going to pay a lot more for it than I would be willing to pay for something that's 2 years old. A dramatically higher number for 10 versus 2.
All right. Thank you. Keeping it going here, there's actually a couple of questions. So I'm going to try to answer them all in this one question around the impact of the COVID-19 pandemic on royalties. Is music streaming down, video up? What's the impact of the reduced advertising budgets and this sort of thing? So we recently did a quick, what we could look at where things stand right now, and we put that together as a report that we send to our all access investor members. But I could kind of summarize a little bit of it here as well. Basically, it's a little too soon to tell, I think, is the main answer, particularly with streaming. So a couple things to point out. Okay, streaming activity. We've been seeing some fluctuations. It would take a lull whenever the stay-at-home orders would fall into place in any location. The streaming would reduce for a period of time, and then it would bounce back, basically. But it kind of doesn't matter. Like the activity of streaming, how many streams are happening in a certain region, like a certain country, if this is streaming activity up or streaming activity down, it's not quite as important. I think the number that we want to be looking at is the overall number of subscription, of subscribers, basically. The way streaming works is that everyone subscribes every month. All that money goes into a pool, a big bucket, and then that gets distributed to all the artists whose music was streamed in that month, basically.
A pro rata share of market share, essentially, of the
market share of what's been streamed. Okay, that sort of thing. And so if streaming goes up, you could actually make less in some cases per stream, right? So anyway, to get to the point, what we want to make sure we're looking at is if the overall number of subscribers go down, that pool shrinks and less is able to be shared amongst artists. So what we're going to be looking at are the overall numbers of subscription accounts. The early data suggests that hasn't gone down and in fact might even be increasing, but we really don't. It's really too soon to tell. Spotify is supposed to be announcing, I think tomorrow, their quarterly earnings, which will include subscriber numbers. Again, that'll be for the whole quarter, so it's going to be really difficult to tell how much may or may not have been impacted by the last 2 to 3 weeks. It's just one of those things that just takes a while to really kind of find out over time how the landscape is being affected by this. But overall, from a streaming activity or streaming subscription count, we're still kind of waiting to see where all that goes. But the overall point of view is that it should be relatively resilient from a streaming standpoint. Now, real quickly, like the concerts going to nothing. Yes, concerts, are not happening, which means that any public performance royalties stemming from a concert is going to go down. But our analysis showed that for at least the royalties that have been acquired on Royalty Exchange, concerts represented around 1% or less of the income that was generated for overall public performance royalties. Same stands for music played in like restaurants and bars. It's very, very, very small, almost infinitesimal amount that actually contributes to your overall public performance royalty earnings. It's mostly coming from streaming and from radio and things like that. Again, it's going to be some time before we could really fully understand the impact of what's happening now because of just how long it takes for that to be accounted and distributed and things like that. And then in terms of advertising budgets, yeah, I would expect ad-supported streaming and even to a certain extent radio that's relying on sharing ad revenue to decrease. Which again kind of just shows that when you're looking at the assets, the individual assets that are available on Royalty Exchange and what you're buying, you want to figure out where are they primarily earning from. And if it's primarily from streaming, again, it's a little too early to make any broad judgments, but that seems a little more resilient than something that's primarily earning from an ad-supported format. And that's the broad way of answering that question. Matt, you look like you got something else you want to add.
Yeah, I personally would expect that ad-supported is going to decline. And I think that if you look at, we have one of the assets that's up in the marketplace right now at auction, Slipknot catalog. You'll notice that the ad-supported streaming. This is a sound recording, so it's particularly tied to streaming. So and you'll see that the ad-supported streaming was already in decline, coming into this period for that particular catalog. And so I think that trend I expect that trend to increase from here. But that catalog in particular, it's a very small portion of the income, and I think that's what you find in general is that the ad-supported revenue is not on the streaming side is not it's not huge. It's usually subscription supported is what really drives things.
Great. Okay, Gary, I think this one might be a good one for you. The question is, what genre of music is primarily purchased, and how frequently is it compared to the less popular music? And I think we can just talk a little bit about the kinds of genres that we see coming to us in terms of the types of artists, the types of music, and what we put available on the site. And you talk with these guys more, so maybe you can answer that.
Yeah. So basically, if you imagine the genres that have a broad base of songwriters that just write songs tend to be overrepresented in the deals we do. And so what I mean by that is Bruce Springsteen writes effectively almost all his songs, and he's the only songwriter on them. And that's true with a lot of rock music and other things. Whereas pop and hip hop have a lot more songwriters that contribute to a track. So like you'll see some hip hop songs have 11 different people that have writing credit on it. Someone wrote the beat, somebody wrote the hook, that sort of thing. And so there's a lot more songwriters that have a smaller interest in songs from pop and hip hop generally. And so that's been definitely the most common types of deals on our site. Then what we've seen in the last few weeks, like I was saying earlier, is more performing artists coming to us. And so that I expect to see a broader representation of genres as that happens. So that's generally, I mean, it's pop and hip hop are the two biggest. And then we'll have some country because there's a real serious songwriting community in Nashville. And then it goes down from there.
Yeah, but we've really done things across really all genres from Christian music to metal to Etta James, and I mean Barry White, Drake and Kanye, and I mean it really crosses all genres. But Gary's point about where generally the concentration of it is because most of our customers, our clients are songwriters, and we get a lot more people in that category.
And we're gonna move on, but I think I'll also add that what happens with us, I think you sometimes see them come in clusters, right? One songwriter works with us, they tell all their songwriter friends, all of a sudden it's like so we had like a cluster of Christian worship music for a while, I think last year, and things like that. So it kind of happens that way. Another question here from Anders: how can I contact previous investors in Royalty Exchange? Right now, we don't have a formal system for that, but it's definitely something that we've talked about looking into. So maybe stand by on that one.
Yeah, I think the biggest thing is that we protect the privacy of our customers. So we don't share the list with people. But I think if you would like to speak with somebody, maybe Rob, could it be okay if they reach out to you and then you can ask some of our former clients if they'd be willing to speak with them?
Yeah, no, we'd be happy to put you in touch. We'll ask a few of our folks that have done some business with us in the past, but certainly reach out to me, Rob at royaltyexchange.com. I'd be happy to put you in touch with some folks.
Yeah, we can even maybe look into seeing if one of them wants to join one of these sometime and be part of the session. Okay, so another one from Glenn. I'm new to royalty investing. I'm trying to get my head around how the asset value works in relation to the income produced. I think we touched upon that with the dollar age and stuff, but Ryan, you just want to maybe just reiterate again what you're looking for in terms of valuing these things.
Yeah, certainly. I mean, and so really, I mean, the basics is, the more stable the income, the more valuable the asset. The less stable the income, the less you would pay for the asset. And I mean, that can very easily, as Matt was talking about, dollar age is a very good heuristic to kind of determine that. The longer it's been out, the more likely it's found its niche market, the listeners that will continue to listen throughout time. And then, obviously you want to look to where the sources are. Is it streaming that's kind of making up the earnings or something else that's less sustainable?
Great, thank you. Here's a question. I think it's definitely directed towards the assets that are listed in our secondary market. And the question is, when an offer expires, how do we know if the rights holder has seen the offer? So real quick, the secondary market is where investors we basically list assets that have already been acquired through the royalty exchange platform, and it allows anyone to make an offer to the investor who acquired that asset to buy it from them after the fact, sort of the, again, secondary market. And if you make an offer, actually, why don't we explain quickly what happens when an offer is made and what happens from there?
Yeah, if you make an offer, the owner of that asset receives an email notification about that offer, and they can choose to accept it, to reject it, or to ignore it. And you, for the most part, if the offer is expiring, you should just assume that they saw it and that it just wasn't that they thought it'd be more appropriate for them just not to respond to it at all. They just weren't interested.
Fair enough. So they are notified, but they don't always necessarily respond.
Yeah.
Okay, here's a question about the terms. Why do we keep attempting to create a 30-year term category? So 30-year terms relatively new. Why don't we explain a little bit about what that is and why it's there?
Yeah. So before last year, we had a 10-year term, where the royalties automatically revert back to the songwriter or seller, and a life of rights buyout. And we did the first 30-year term for an idiosyncratic reason, but it turns out that there's based on what the seller needed, and it turns out that there was some demand on sellers' behalf that they wanted to do something that was longer than 10 years and shorter than life. And so it's a way for them to know that they're going to get the royalties back, but also raise more money than is possible with a 10-year. And based on what we've seen, investors like the 30-year, certainly better than the 10-year. It's a longer period of time to own the asset. And so that's why we did it. And those the 10-year, 30-year life of rights, right? Those, when we talk to sellers, right, it's a conversation about what they're trying to accomplish, what their goals are, and we work backwards from that, at least on my side of the business. And so the 30-year term is appropriate for certain sellers, and that's what they want. And that's why we do it. And then the last piece is with ASCAP. If you're a songwriter with ASCAP and you're making less than a certain amount of money, it's very difficult to actually assign your royalties for life. So the 30-year is a way to make it a temporary assignment, but one that has some meat on it.
Yeah, and just to touch on the kind of the investor side, I mean, when you look at it from a time value of money standpoint, right, there is very little difference between the value of the 30-year to the life of rights, right? You can pay very close to the same multiple.
Yeah, the earnings that are coming in the 29th year are not valued very highly, no matter how optimistic your cash flow forecast might be.
Okay. Great, thanks. Yes, 30-year term, definitely a new addition to things. All right, the last quick question that came in advance was basically, I'll just answer this as a simple yes or no. If I'm in a different country, can I still invest in royalty exchange? Yes, simple as that.
As long as you're not in a sanctioned country, so Cuba, Iran, whatever that list is. There's
North Korea.
North Korea.
Fair enough. Fair enough. Generally, yes. So I'm going to switch over to, we've got a number of questions that came in via both chat and via Q&A. I'm going to hit the chat ones first because they're fewer. How do you determine the opening price of an auction?
Carrie, you want to do that?
Oh yeah. So the opening. So as well, I'll assume that you don't know this, but basically the starting price is the reserve price on all the auctions on our site. So if an auction gets a single bid, the seller is obligated to accept that. Okay. And so when it comes to this is generally most of the work that we do with sellers is helping them understand the realistic value of their catalog and getting them to agree to a starting price that is reasonable. We turn away a lot of assets, some really good, some okay, if the seller is not willing to set a reserve price that we believe is reasonable. And so it's a discussion, it's a negotiation between us and the seller to determine what's the right starting price.
Yeah, it's a real risk for them. They feel because, because the starting price is the reserve, there's a couple dynamics that are very unique at play. Number one, the seller has to be, however unlikely it is that's going to be, they're only going to get one bid. They have to be willing to accept that might be the top end of what they receive, that's what they're going to get. So they have to have that okay in their mind. And then at the same time, auction dynamics, if you act to create a really well-functioning auction, a lower starting price is way more effective and ultimately can end up with a higher closing price for the seller, but they have to take on more risk for that to happen. So there's a lot of education, and there's a big balance that we try and strike there. Our default is always to try and keep it lower because we believe in market dynamics and we want the market dynamics to work.
Yeah. And I think too, it depends on the asset. And so if you have a really high quality catalog, we're willing to move the starting price up because, like, frankly, we want to bring you as many great assets as we possibly can. And so if it's between a seller walking and us starting the auction at a multiple higher, depending on the quality of the asset, that's a decision that we make internally. And if it's a great asset, we want to bring it to you.
We want investors to have the opportunity to own it. Yeah. And it makes it less compelling for that starting price, but it would have ended up at least at that point anyway. So yeah, it is a balance for us.
Yeah. And the last thing I'm going to say on this too is, it's one of the design decisions we made with the marketplace to have the starting price be the reserve price. And the reason we did that is actually because for you, because if you're moving money around to be able to actually pay for the asset if you win the auction, and it's an aggressive timetable, right? It's 2 days after the auction ends, you need to send the money. So if we had a starting price and a reserve price, which were different, then the market dynamics would start to break down because you'd be bidding on something and you're not even sure that if you're the high bidder, you would win. So it's like that, if there's something on the site and you place a bid and you win, you're going to get it, which we think is important.
All right. So quick question here. There's a number coming that I want to try to get to here. So we're going to kind of do the rapid fire answers now. Can you quickly say something on how a royalty is typically depreciated for tax purposes? Is it just the royalty total price divided by the number of years, like 5 years? And is that your depreciation for the year?
Rob?
Well, let me couch this, of course, by saying I'm not a tax advisor. Don't take this as a tax advice, but I know that some people, I think there's a couple options, right? You can look into depreciating it over 15 years straight line, or you can do the income forecast method where I think you forecast it out 15 years, depreciate based on that. And I think you have to update it every year based on what actually comes in after the fact.
Okay. So we'll leave it at that for now. Another question, is there a possibility to acquire just a % on royalties, like an artist sells just 20% of their right? And the questioner asks, I think it would be cool to become a partner with artists. And I think that pretty much is exactly what we offer.
Yeah. I mean, when you see a songwriter or you see an asset on our site, that's the ASCAP royalties. Even if it's 100% of the songwriter's interest in those songs, it still only makes up a portion of their total earnings because they're being paid from other sources. And so when you see that, you are in some sense a partner with the artist. And then at the same time, we'll do percentages of an artist's income stream. And so it's even more obvious that you're in with it. You're in along for the ride with them.
So the short answer basically is yes. There's a lot of times people come to us, they'll sell 25, 50% of their ASCAP, or at least Gary says, even if it's 100%, you're still partnered with other types of other types of revenue around that song. So you're absolutely partnered with the artist and with the other folks that are financially incentivized to kind of keep that royalty stream going. Another question here. For an investor who's not an all access member, how can I calculate potential ROI? So just ways of calculating ROI.
Yeah, I can take that. So for term advance, essentially, it's going to be, you have to allocate in the amount you pay for principal, right? Because after 10 years, that the royalty recedes back to the artist. But essentially, the way we do it, the easiest way I think to do it, you take that amount you paid for it, you divide it by 10 years, right? And so you get the amount of royalties you receive minus the amount that you are allocating towards your principal every year, and you divide that over your purchase price.
Okay.
For a life of rights, it's just going to simply be the income that you receive divided by the purchase price. And the reason there's no allocation for capital in that situation is that you can resell that asset 10, 20, 30 years down the road, right? And ideally you can get the full amount still from that life of rights asset.
Right. All right. There's another question here. Let's see. There's two questions different. Well, actually, the same person asked the question on two different formats. So anyway, what are the current streaming rates payouts on average for a song spin? Do we know that? I'm not sure that we're the best source of that information.
Okay, so I think there's a lot of headlines out there which are like, I got paid,
X,
1,000th of
Y.
a penny per stream, right? We don't talk about those because I think frankly it's a bit of a misleading number, because the way, if you imagine, right, with a streaming, say Spotify, right? So Spotify has 100 million paying subscribers that are paying an average of $7 a month, right? So each month there's a $700 million pool of money that gets allocated on a pro rata basis based on popularity. And so because of that, your streams can go up, but if they're not going up as fast as everyone else's streams, you could get paid less, right? Or, so it's this effectively a popularity contest based on consumers' preferences measured by what songs they stream. So we don't look at that, to be frank. And I think all of those things can be misleading, right? Because you have also the difference between a songwriter's share of the income from a streaming service and an artist share. And then on top of that, you have the publishers and the songwriters, and then you have the record labels and the artists. So roughly Spotify's paying out 70% of their subscription revenue to rights holders. And then that percentage is allocated on a popularity basis. So it's not a great answer to your question, but it's not a metric that we look at because there's a great deal of variables.
Variance, yeah, exactly. Okay, let's see, moving right along here. Is there any way to review the performance of assets sold by Royalty Exchange after they were sold? So do we keep track at all after the sale?
Yeah, we certainly keep track, and we do a kind of a returns analysis as well. There's no way for us to give you, specific data on any one asset, just, due to investor privacy, that sort of thing.
Oh, but you could see it on the secondary market.
I was just going to say, right, yeah, there's information on the secondary market if you go into each one.
Yeah, so if you look at any asset on the secondary market, you can see what price it was purchased at, when it was purchased, how much it's made. So you could look at the performance that way.
It's not
on the secondary market.
It's not summarized, and it's not totally, it's not all the assets are listed in the secondary market. We're constantly adding more of the assets that we've originated onto the secondary market. But the number that Ryan quoted earlier in terms of the averages was about 12. And that's based upon analysis of everything that we administer over the prior 12 months. So we'll continue to update that information. And if you want to just, what we encourage people to do, if you're really trying to learn about these assets at all, is don't go and bid on something. Don't go and buy something right away. Sign up for an auction, watch it, see the market dynamics, look at the income history, compare one asset to another asset. And just over time, you'll get a much better feeling for how these things are valued by other market participants. And you'll be able to make better decisions. Once you Once you have that confidence from seeing enough of these assets transact, whether looking through auction history or actually just watching them live, you'll know when it makes sense for you to kind of dip your toe in the water.
All right. Question here about resources, basically. You talk about dollar age versus return. Where can one research other historical data for examples, separate from the 3-year history provided in the listing? Is there a database or something where you could search for any song to see its royalties over time and find something as a comparison to the songs that's being listed, so they could kind of create some kind of a comp, so like what you do with real estate, for instance?
Well, I'll let Ryan tackle this one in a second. Anyone else has anything to add? But I'll say that in any of the auction listings, we actually provide the raw earnings history file as well as those summary charts. And you can download those raw earning history files, and you can see lots of other details about the earnings. So it's not limited to the summary charts that we provide on the most recent year's earnings. There's a lot more data in each auction listing, and I would encourage you to check that out. Does anyone else have anything they would to add to that in terms of comps or other ways to look at these assets?
There's all the auctions that we've done are on our site. There's a secondary market. I mean, I know Ryan and I have been looking for a long time for a data source, and our website is literally the most comprehensive source of actual earnings from songs that's
publicly available.
Yeah. It's the music business is not the most transparent when it comes to things like this, and it's one of the things that we're trying to lean into a little bit more to make this an easier asset to kind of analyze. But yeah, that's the case. I mean, I also know, like, in the auctions, if you get, at the bottom, you'll see similar auctions that are vaguely, you can look at closed auctions that were kind of in that same category. It's not exactly apples to apples, but it's the closest that we can offer from an automated standpoint. But then again, there is a lot more data in each listing too to analyze. So there's that. Here's a question here about, let's see here. Are most artists selling their catalogs as life of rights, or raising money to have cash on hand in exchange for you selling them on the market? I'm not sure. I'm reading the question, but I'm not sure I understand it fully. There's a follow-up that says, specifically, how is your system different from Pullman's Bowie bond?
So it's Pullman's Bowie bonds were securitizations of catalogs, right? They were debt, right? So you would have some claim on the income that was, if the coupon wasn't paid, then your collateral was the royalty streams. Big difference here is you're not buying an interest in a securitization vehicle. You're buying the more bare metal asset itself. And that's the fundamental difference.
You're buying the income stream, and there's not like a performance, whereas debt, there's an obligation to make certain payments in a certain period of time, and then there's a coupon at the end. I'm sorry, no, you have to settle at the end of that term. These aren't where those, again, the coupon is known in advance. With this, the royalty income can grow over that time period, or it could go down over that time period, and you're essentially buying claim on that royalty income, whatever it is, for a 10-year term, for the life of rights, or in these rare cases, the 30-year term. So it's not debt. It's just not debt. It's claim on the income instead.
Yeah, I mean, I think the way I like to think about it is, if you imagine a hypothetical capital stack, right? You have debt, you have equity, and then somewhere in the middle is a royalty stream, right? And so with the Bowie bonds, for example, right? The coupon was like 7.9%, I want to say. And so that's what you got paid. If they couldn't make the payment, then you took possession of the catalog. So with this, it's closer to equity because you're getting upside, right? But at the same time, it's a little more, well, I don't even know if I would say it's more risky. It's just you get upside.
Okay, great. A few more questions. Any specific consideration about investing in production music catalogs?
I can touch on that. So we rarely list them lately. So essentially we saw a couple production catalogs come through, and we noticed that they were high quality TV shows, movies, that sort of thing, and that they were listed on streaming sources like Netflix, Hulu. So we have kind of toyed around with putting those on the site just due to allow investors to play that market, because it's certainly a very interesting market and certainly a very valuable one as well. The main thing I'd say is, make sure it's something that can be put on one of those streaming services. Because that's going to be where the majority of your royalties are going to come from for that. Stay away from the reality TV shows.
Yeah, there's just fundamentally different classes of production music, and it gets lumped into this same one single category. But there are certain classes of this music that does have repeatability. Where the income, it has a track record of income, just like put a dollar age on it. And you can see that it's likely to keep earning into the future because, it's music for a movie that's, very popular and streamed over and over again. But there's another class where they're basically they're music cues, and they don't have, there's a reasonable substitute music that they're using, in those TV shows, and that it's unlikely to continue earning in the same way. So we avoid altogether the production music catalogs that sort of fall into that queue, where it's in certain categories. And then others, we have done other production music catalogs on the platform before, and they can be really great. They can be extremely good assets, as long as they're, we're differentiating between where exactly the income is coming from and whether or not it's likely to continue into the future.
The mental model I use is, could you imagine someone in 5 years watching this show that the music's in on Netflix or Amazon Prime, right? And generally a good rule of thumb is unscripted reality TV has very low catalog value, right? And no one's clamoring to watch season 13 of The Real World. And you could see it because, companies that produce a lot of that content, right, are not doing great in the streaming era. So now if it's a movie that people will watch, then it could be an interesting asset. If it's episode 17 of season 9 of Keeping Up with the Kardashians, not.
Well, just one example is part of a Dire Straits catalog that we sold a while ago. There was credits in there for The Princess Bride, which is my personal favorite. And so that one has been played for 30 years and it's going to be continued to play.
Yep.
All right. Another question here. Is this market very liquid? How many unique investors are there in the world for this market? It's a good question.
Well, this is an esoteric asset class at this point. It still is. Now, there are a lot of very sophisticated folks who have started investing in music royalties over the last, certainly over the last 5 years. It's really picked up pace dramatically. And so the amount of capital that's trying to get these assets certainly exceeds maybe the number of participants, that are playing in it. But we've only seen that in the time we've been in this space, which is a little over 4 years. We've seen it grow substantially. I mean, we had more people last month that registered as investors on our platform than we had in the prior several months, despite everything that's going on in the economy. So interest is only growing every single day, it seems. The demand for income generating assets is only growing. And is it liquid like Apple stock? Not even close. Never will be. But certainly there's a lot of investors certainly that on our platform that are very interested in acquiring assets, and there's a shortage of assets as compared to a shortage of investors.
Yeah, and I can just jump in. I mean, personally, I see the market's more liquid than I assumed it would be. The one thing I'd say, I mean, there's always a way to get you out of it, the investment, right? You can always go to auction. We'll list it for you. It's just a time constraint on that point, right? It'll take you a little bit for us to get the auction up and list it on our auction side. But you also have the secondary market, right? Where your asset is at least on the performance side is always listed, or at least at your discretion can always be listed, and you can always be just kind of receiving bids on a daily basis or whatever it may be. So
and
that's
if you're on
something
the
to keep in
secondary
mind.
market, there's a setting the list price. It's just basically your way of saying that, yes, I will sell this at this price. And if someone bids at that price, it automatically moves, right? So like you have that's like basically your for sale sign, for lack of a better term, on the secondary market. All right, let's see here. Just a couple quick few more questions that we might go just a little bit over to kind of answer these, but I think it's worth doing. What is this is a tough one. What is the average bid for most auctions? I don't know that there's an average dollar bid, but is there a way of answering that from a
so
standpoint?
the average bids we saw in the last 12 months was about 19 per auction.
That's number.
Yeah. So.
Okay, but in terms of like the average bid, like I don't think there's a
The
dollar.
bidding increment.
No, I think it's these assets are so heterogeneous that an average at best would be misleading. So there's some assets where the price will double from the starting price and there'll be 40 or 50 bids, and then there's some that there's just a handful of bids. So usually the price goes up from the starting price, but that the assets are so different, each one, that it's hard to give a reasonable answer to that question.
Yeah, it's a tough one. Do you tell us who the publisher is for the artist? Meaning if they self-publish, if they're backed by a big publisher, etc.
Yeah, I can take this one. If they're a songwriter, it's not going to be listed on our listing, but that is public information. You can go to any of the PROs. They all have what they call a repertoire. So you can search a song title, a publisher, an artist, and then based on who the involved parties are, you can click on who the publishers are. So for our purposes, the songwriter may have a major publisher, but they probably are also not the only songwriter on that work. So maybe another songwriter is represented by a different publisher. So there could be 2 or 3 different major publishers involved in any given composition.
And that's just for one song. If you have a catalog of dozens of songs, you can just imagine how that can kind of stockpile into a long list of not very helpful information. Right, basically. So, but if we're selling something that's more on the publisher side, then yes, that publisher is listed.
Sure.
Okay. Let's see here. This kind of goes back to maybe this. I don't know if this necessarily relates to the production music catalog, but how does instrumental catalogs compare to vocal catalogs? We already answered the production music side, so we don't have to answer that. Is there anything beyond production music that would be notable here? It doesn't. I don't. We do a lot of like electronic music that doesn't have any vocals. That's just as commercial and popular as non.
Yeah, I mean, I think there's that, and I think there's also, and it started with YouTube and really expanded with Spotify. But there's an entire category of catalogs that are like Spring Rain, and it's like 7 hours of listening to Spring Rain, or like. There was one catalog that we respectfully declined to sell, which was overhead fan noises. Which was interesting. The guy was making a nice income from it. Right. But I view that sort of thing. So if you imagine like, the economic concept of substitutes is quite useful here, right? So a Kanye West song does not have any real direct substitutes. Right. If you want to listen to Jesus Walks, you want to listen to Jesus Walks. You're not going to substitute it for something else. Right. But like production music, especially stuff that's on reality TV shows driven by cues. So like a cue is like a brief little bit of music. It's like, boom, when something bad happens. Right. Those things those are easily substitutable goods, like some instrumental music. I'm not saying all, but some instrumental music. And so we view those as closer to production music generally than something that isn't.
Right. And that's not EDM. We're not talking about EDM that has, known artists or anything like that, but we're talking about music that is, like Gary says, like somebody's overhead fan recording that people want to listen to at night on Spotify could be replaced with another overhead fan.
Okay. Yes. Yep.
I've got 3 more questions that we're going to go through, and then that's it. And the 3 that are already here. If you have any more questions, we're going to save them for another time. You can always email us at investors@royaltyexchange.com, and we'll do the best to answer your question.
I mean, if you want to type them in, we could follow up afterwards.
Exactly. We could always try to follow up, but I'm going to try to get these last few out now. So one is this real simple one. If I win an auction for $10,000, what is my total cost? And I think I know the answer to that question, but.
Well, nothing if you're an all access investor.
No,
right?
your total cost is $10,000.
Well, right. No additional if you're an all access investor, but for non all access investors, we have a closing fee of either $500 or 1% of the auction closing price, whichever is greater.
Right, and that's to handle the administration of the royalties afterwards. Another question here is if the owner of the right passes away, is the passage of that right to the heirs easy? And don't apologize for asking a macabre question. He said he apologized for the macabre question, but so maybe talk a little bit about that. Like, so there's a lot of, from an investment standpoint, how does that work if the person who dies, basically, who is the underlying copyright owner?
God, I probably should. Don't die intestate. If you've got a will, it should be relatively simple. But the estate planning process should account for the transfer of these assets. So it's very much an individual question. But yeah.
But generally, I mean, the copyright is the lifetime of the author plus 70 years. So I mean, so if I'm an investor and I'm buying a songwriter's share of a royalty, and the person who I bought it from passes away, do I need to worry about what happens to my investment? I think is the spirit of the question.
Oh, I thought they were talking about if they already owned it and they pass away.
That it could have been that too. I hadn't thought of that. Sorry. There's always room for interpretation on these.
Yeah.
If you've purchased it from the artist, then that transfer is legal and it's binding. Even if they pass away. And the question is the underlying copyright that makes that allows for that income that's being earned by the artist and allows for them to be able to sell it. That expires after a certain period of time and it becomes public domain. And at that time, there aren't royalties to be earned on it. But that time period is in copyright law in the U.S. after 1978. Correct me if I'm wrong, Rob. Is life of the last living author plus 70 years. So there's a long time associated with these.
Okay.
That's right. And your purchase through royalty exchange is of course binding on the successors and heirs and assigns of the original songwriter as well. So.
Okay. Yes, there is going to be a replay of this sent to everybody who registered. In fact, even everybody who didn't. So there'll be an opportunity to listen to it afterwards if you missed any part of it. There's some questions around taxes. We did answer that question earlier. So in the replay, I would say focus on the answer we had there. Last question. It's a very specific question that's not going to apply to a lot of people, but I want to get to it anyway. And John, if this doesn't quite satisfy it, please connect with me afterwards and we'll drill down a little bit further. But the question here is that this is from an investor who went through the verification process via phone yesterday. This investor is also a former songwriter. He was told that he would not be able to add any life of rights songs that he acquires on royalty exchange to his ASCAP royalty statement that he owns as a songwriter. And his question is why. It's a little detailed, a little unique, but maybe there's some broader learnings that everyone can pick up on from this one.
Rob, do you have any insight on that?
Yeah, I'm not sure I totally follow what they were asking.
I'll tell you what, maybe
it might just be a us administering question, and that we responded to and say no, we default, being the administrator here. But if it's a songwriter, if it can be added to their existing, their existing earnings that they're collecting from ASCAP. I mean, maybe that's a question probably that we should follow up with Rob and maybe DD separately.
Yeah, I think that might be the singular time that's ever come up. And so it just might be one of those outliers that we just haven't had a process for until now. So we'll be happy to kind of try to figure that out. So John, we're going to get back to you on that one more directly. Let me just make sure there's no last minute things. Yeah, those are basically all the questions. About 11 minutes over, so I think that's not too bad.
There's one more though. So royalty payment is income or dividend for tax purposes. Seems like an important one. So Rob, you jump in if I start messing this up. We're not tax advisors. First. Number 2, royalties are treated as income, not dividends, but the income can be amortized over a period of time, like we talked about earlier.
The cost of the asset, yeah, essentially you could appreciate the asset, but offsets a substantial portion of the income.
Yeah.
Okay, great. Thank you. We're going to continue doing these weekly for the time being. And so please, like I said, we're going to share the replay of this for everyone. If you have more questions, you could always ask questions to investors@royaltyexchange.com, and one of us will try to track down an answer for you. We have the next session coming up next week, same time, Tuesday, same time, 11 o'clock Eastern. And thank you very much. We look forward to answering more of your questions in the future. And thanks for the panel. We had almost the whole crew
thanks
here today.
Bob and Gary for joining us.
Yes, thanks very much, guys. See ya.
Thank you.